Let's talk about the story that was yesterday. We saw the market essentially going nowhere with just 3 hours of trade possible yesterday. But interestingly, there was the launch of those indices. But perhaps before we talk about the launch of those indices, let's talk about that market that was yesterday. As I said yesterday, essentially the market didn't go anywhere with that limited amount of time for trades.
Yesterday was essentially, as you said, limited hours in terms of trading, mainly because of a technical hitch on the side of the Nairobi Stock Exchange. Trading opened at 1:30 local time as opposed to 9:30 local time, but they extended the hours up to 4:30. What this meant was a bit of disruption on the market, slowed volumes with a bit of focus on Safaricom and Cooperative Bank. And also most of the local brokers were trying to figure out what the hitch was. So before they actually started getting their orders and executing, it took a bit of time and a bit of confusion, which was actually the result of the lower volumes and lower market interest yesterday.
Yeah, so two stocks that were in the news yesterday were Safaricom as well as Centum. Safaricom closing flat on the day and Centum up 1.3%. Those companies out with results today. Have you had a chance to take a look at the results from Centum?
Yes, I attended the Centum first half briefing. I think that the numbers were pretty much in line with what the market was expecting. As you mentioned earlier, the bulk of their investments on the quoted exchange, the Nairobi Securities Exchange, definitely took a tank over the period, and this led to slightly lower profit after tax and profit before tax figures. But I think the year-on-year comparison was 1 percentage point differential, which is neither here nor there compared to the NSE's performance, which was down 16% over a similar period. I think the other key thing for Centum was also some of their unquoted equities, especially on the insurance side, were sort of not performing as well as anticipated, and this led into the associated company profits for the year. Indeed,
and at the same time, after looking at those results, would you say this is a buy for you?
We don't cover the stocks, so I'd not actually have a recommended rating on it for now.
Absolutely, but I see the stock market in Nairobi is down 26% for the year. So certainly,
yes,
just in terms of raw numbers, this would be one stock to look at. Let's talk about Safaricom with those upcoming results. We know they increased prices, but they increased prices towards the tail end of the year, of the reporting period that we're talking about now. What are you expecting out of that stock?
And I think the key focus for us as a research house will be the data revenues that are coming in, as well as the M-Pesa revenues. I think the impact of the increase on the call tariffs will not be a huge impact for the first half year for this company, but should be able to sustain their year-on-year revenue rates when they report next year. I think what will be interesting is just to see if there's been an increase in terms of the actual subscription numbers, given that we're almost getting to a point where there's this saturation in terms of everybody actually has a mobile phone and actually has a subscription line. But I think of interest will just be to see how the growth from the data revenues has been performing, because I think that has been actually the key profitable area for this company.
Yeah, but what's your position on their increasing tariffs at a time when we know their major competitors have sort of stayed unchanged, if you like?
I think in as much as they are major competitors, you're still running a business as opposed to a charitable organization.
Yeah.
And in a high inflation environment, high interest rate environment, this is a company that's highly capex driven, meaning that it either has to look into its own reserves or borrow funding to be able to enhance the quality of its voice calls. So I think in such an environment, I mean, for you as the end consumer, you're not happy that that you actually have to pay more, but the stickiness of the M-Pesa then actually derails you from moving, say, from Safaricom to the next competitor. So in line in terms of sustainability of the lower tariffs, that's highly unsustainable, and I think what Safaricom did was actually expected.
But do you think they'll be able to hold on to market share given the fact that they have moved when everybody else has essentially stayed where they are?
I think maybe the risk to this would probably be a slowness in terms of growing your market share. But as I mentioned earlier, the stickiness of M-Pesa. If you have M-Pesa, it's not that easy for you to just get up and leave Safaricom. I think I look at it, if I already have Safaricom and I want to call the next person, I start getting an Airtel line, and I largely do most of my transaction based on M-Pesa. M-Pesa would actually make me think twice before I actually move from Safaricom to the next competitor. So I think that the key thing here will be the stickiness of M-Pesa and brand loyalty that comes along with it, which will probably help them sustain market share, at least in the short term.
Indeed, time will tell. Let's move on to the launch yesterday of those FTSE-based indices. And we saw yesterday the announcement of the FTSE NSE Kenya 25 as well as the 15. Just in terms of what the indices mean for the Kenyan market, just give us a broad brush.
I think for now, the market will be just trying to understand the theology, the understanding, just the background of these indices. But I think what I can say for the Nairobi Securities Exchange is that it was a stakeholder-led process. They actually went around meeting most of the stakeholders and trying to understand what the deficiencies were with the current indices. I think working with renowned houses, the FTSE and other stakeholders, it's definitely a positive in terms of the credibility of this new index. And I think this new index actually seeks to capture the day-to-day performances as opposed to the older index, which was market-weighted and skewed towards how Safaricom would more or less perform, because Safaricom actually had a 40% weighting and would actually determine the NSE 20 performance. I think this new indices are actually positive for the market and actually reflect a true picture of what's happening on the ground.
Yeah, the interesting point for me, of course, is that yesterday we had the launch of those indices, and at the same time we had foreign participation in the market declining, and yet the launch of these two indices by the FTSE Group, which is known globally for its methodologies are accepted by the global investment community. The idea would be that you'd expect foreigners would be more interested in the Kenyan market than before.
But if you're a foreigner looking at the Kenyan market, I think you'd be more interested in the fundamentals of
Sure.
the individual companies as opposed to how an index has been launched or how it's going to perform,
Sure.
because you can't even track it from yesterday. So I think yesterday's glitch in terms of lower foreign investments was more due to the technical hitch of the market delaying in terms of opening.